Whenever you hear that promoters are selling their stake in a company, what's the first thought that comes to your mind? Fear, panic, a red flag. But what if I told you that in the last 3 months, promoters have sold stake in more than 60 companies? Companies with RoE above 15%, low or no debt, and in many cases, industry leaders. These aren't weak businesses. In fact, some of them are investor favorites. So what's going on? In this video, we'll bust one of the biggest investing myths, that promoter selling always signals trouble, and we'll do it with real data, real examples, and a framework you can use every time. By the way, if you're tired of shallow headlines and want to truly understand what drives smart investing decisions, hit that subscribe button. This channel is all about clarity over noise and helping you become the investor who sees what others miss. And make sure you stick around till the end, because I'll be sharing a 5-point framework that you can use to analyze any promoter selling event, so you never fall for panic headlines again. Let's get into the topic. Let me walk you through the screener I used to build this list. Here's the criteria. Return on equity greater than 15%. Debt to equity ratio less than 1 promoter's reduced stake in the last 3 months. Stock price stayed flat or fell in the last 1 month. The result? A list of over 60 companies including SBI, India's largest bank, Pidilite adhesives leader, Dixon Technologies, contract manufacturing giant, Tata Elxsi, design tech star, Angel One, fintech disruptor, and many lesser-known gems too. For your convenience, I've compiled the full list of all 59 stocks that passed this screener. RoE above 15%, low debt, promoter stake reduced recently, and flat or negative 1-month return. You can view the complete list via the link in the description below. Feel free to explore, sort, and analyze it for yourself. Let's look into 3 real examples from the list where promoters sold, but the stories are completely different. Let's start with Polycab India, a company known for its dominance in the electrical wires and cable space. Promoters recently reduced their stake by a small margin, but here's the twist. The company continues to maintain a RoE of over 20%, has negligible debt, and is rapidly expanding into FMEG, fan, switch, lighting categories. In the last quarter, despite this promoter selling, FEUs actually increased their holdings and institutional confidence remains strong. So what's happening here? This looks more like a portfolio diversification move by the promoters, not a loss of faith in the business. Next up, Dixon Technologies, India's leading contract manufacturer for electronics, from TVs to mobile phones. In the last 3 months, promoters reduced a small portion of their holding, which spooked some retail investors. But take a look at the numbers. RoE is still upwards of 18%, debt levels are controlled, new customer wins and PLI-led expansion are in progress. Why did the price fall short-term? Likely because of valuation pressure and expectation mismatch, not because promoter selling revealed weakness. In fact, this kind of minor trimming is common in high-growth mid-caps. Now let's look at a very different kind of case. Jana Small Finance Bank. Promoters here reduced their stake post-IPO. But unlike the other 2 examples, this wasn't driven by personal or business choice. It was due to regulatory compliance. The RBI mandates promoters of small finance banks to gradually bring down their stake over time. So this is not a red flag, it's a regulatory necessity. Fundamentals? Solid. Our RoE is improving quarter on quarter. Loan book is growing. Yet since the news headline said promoters selling, many retail investors overreacted. So let's pause for a moment. Promoter selling isn't one-dimensional. It can mean portfolio rebalancing, like Polycab, liquidity release in a high-growth stock, like Dixon, or regulatory-driven reduction, like Jana SFB. Each story has a different context, and that's exactly what smart investors decode, not just the headline. Let's now talk about the most important part of this video. A simple 5-point framework you can use whenever you hear promoters are selling. We'll also plug in a few real stocks from our filtered list, so you can apply this immediately. Point 1. Percent of stake sold, is it big enough to matter? If the promoter has sold 0.5% to 2%, it might just be for liquidity, IPO unlocking, or internal restructuring. Example, Dixon Technologies, India. Related promoters trimmed less than 1.5% in recent months. Business fundamentals are intact, and long-term vision remains unchanged. Tata Motors. Recent dilution happened via strategic business restructuring. Tata Sons still holds a massive chunk, no loss of control. So always check the scale of the sale before jumping to conclusions. Point 2. Does the promoter still hold control? If the promoter still holds 50% plus or a majority share, they still have skin in the game. Example, Alchem Laboratories' promoter stake reduced slightly, but they continue to hold over 55%. Full control, long-term interest still aligned. Angel One-related promoters hold over 43% post-sale. While it's less than majority, they remain the key decision-makers in a tech-first business. So unless control is shifting to institutions or others, this is not a red flag. Point 3. What's happening with business fundamentals? Always ask, has ROE dropped? Is revenue slowing? Has margin contracted? If the fundamentals remain strong, the business story hasn't changed. Example, Pidilite Industries, Alt-D. Even with minor stake sale, ROE is tilde 23%, revenue is growing steadily, and the balance sheet is clean. Polycab India Ltd, consistent double-digit growth, 20% plus ROCE, and market leadership in wires and cables. A stake trim doesn't reflect business weakness. This step protects you from reacting emotionally to news without looking at data. Point 4. Are institutions buying while promoters sell? If mutual funds, FEIs, or insurance firms are increasing their stake, it could signal continued confidence. Example, Tube Investments of India, Ltd. Despite promoter stake adjustment, DIIs increased their exposure in the last 2 quarters. Netweb Technologies. India Ltd post-IPO, promoters sold a small stake, but strong institutional interest and anchor investor support indicate conviction. Track the shareholding pattern quarter over quarter. It reveals what smart money is doing. Point 5. Is there a structural or sector-based reason? Sometimes selling is due to non-business reasons like regulatory needs, IPO unlocks, or sector mandates. Example, Utkarsh Small Finance Bank. Ltd promoter selling was part of regulatory requirement to bring down ownership post-IPO. Jana Small Finance Bank, Ltd RBI rules require promoters to bring stake down over time. This is compliance-driven, not sentiment-driven. Don't confuse regulatory moves with business decisions. So, here's your cheat code for the next promoter sale you come across. Ask yourself, how much was sold? Is control lost? Are fundamentals still strong? What are institutions doing? And is there a structural reason? In investing, perception often beats reality. The media hypes promoter selling because it sounds dramatic, but the best investors know how to stay calm and focus on facts. Promoter selling can be a signal of trouble. Oregon, a non-event in a healthy company. The key is in the details. I've put together a Google sheet of all 60+ stocks in this list. You can download it using the link in the description. And remember, the next time you hear promoters are selling, don't panic, investigate. If this video helped you see promoter selling in a new light, do me a small favor. Like the video to support the content, share it with someone who always panics on headlines, and don't forget to subscribe, because here we decode the markets with clarity, not chaos.